Daniel. Move on to the U.S., where the stock index futures pointed to a mixed open as traders appeared to adopt a wait-and-see approach ahead of monetary policy guidance from the Federal Reserve. While the Fed is not expected to raise rates following its two-day meeting, many market participants believe the central bank will announce the unwinding of its $4.5 trillion portfolio. The U.S. Central Bank is due to announce its decision at 2 p.m. Eastern Time. Investors will also see existing home sales for August released at around 10 a.m. Eastern Time. Looking at those futures numbers, they're looking kind of mixed. The Dow Jones Industrial Average 0.02% down, S&P 500 0.01% up, Nasdaq 0.01% down. In Asia, the indices closed largely unchanged today as investors awaited monetary policy news coming at the conclusion of the U.S. Federal Reserve's two-day meeting. Japan's Nikkei 225 edged up 0.05% after surging close to 2% on Tuesday. Across the Korean street, the Kospi slipped 0.16%. The Australian ASX 200 lost 0.08%, with the telecommunications services sub-index falling 1.45%. Financials were also pressured, with the sub-index edging down 0.29%. Markets in Greater China made moderate gains, with Hong Kong's Hang Seng Index rising 0.24%. On the mainland, the Shanghai Composite advanced 0.28%, and the Shenzhen Composite tacked on 0.833%. And to other market news here in Africa, South Africa's Sasol will write off $900 million of debt used to bring in black investors in a 2008 deal that funded after a fall in oil prices hit its shares. The 28 billion rand deal, at the time the biggest black economic empowerment transaction in South Africa, was part of corporate efforts to redress the imbalances of apartheid, which ended in 1994. More than 2 decades after the demise of white minority rule, much of South Africa's wealth remains in white hands. Sasol says it will buy back the outstanding 12 billion rand of shares from its black investors, effectively cancelling them and allowing the company to write up the shortfall. Sasol expects there will be no distribution of Sasol shares to participants, given the closing Sasol ordinary share price of 389 rand on September 4. Below break-even levels to pay back debt. Angola's sovereign wealth fund has become profitable for the first time in 2016, thanks to the appreciation of its private equity investment in deep water, port and agricultural projects, as well as reduced operating costs. The fund, which launched in October 2012 and is known by its Portuguese acronym FSDEA, had $4.99 billion in assets under management at the end of last year, compared to $4.75 billion at the end of 2015. Net income for the year came in at $44 million after a loss of $135 million in 2015. Private equity investments had increased by $260 million year-on-year, with profits across 2 of its 7 private equity funds offsetting losses elsewhere. And Mozambique has offered a portfolio of small renewable energy projects to foreign investors, which it hopes will attract $500 million in investment and give everyone in the southern African country electricity by 2030. Around 60% of people living in Mozambique, which is highly indebted, have no access to electricity. It plans to do this by providing electricity to some 332 villages around the country using hydro and solar power. The portfolio has identified potential sites for projects using solar, hydro, or a combination, and could attract an estimated investment of $500 million. And looking at commodities now, oil prices rose today after Iraq's oil minister said OPEC and other crude producers were considering extending or even deepening a supply cut to curb a global glut, while a report showed a smaller than expected increase in U.S. inventories. U.S. West Texas Intermediate crude futures were up 33 cents at $49.81 a barrel. Brent crude futures climbed 23 cents to $55.37. OPEC and producers, including Russia, have agreed to reduce output by about 1.8 million barrels per day until March 2018, in a bid to reduce global oil inventories and support prices. Some producers think the pact should be extended for 3 or 4 months. Others want an extension until the end of 2018, while some, including Ecuador and Iraq, think there should be another round of supply cuts. After the break, African capital market CEOs advocate market integration and linkages. Details in a moment. To stay with us.